is Eternal, which owns the brand Blinkit as well as Zomato, a space which is very closely watched out for. So this particular counter really opened with a gap up opening of 7% gains. Yesterday also around the result time and with the announcement of the CEO change in the company, the stock showed a huge amount of momentum. But at the current moment, it is down almost 1%, below 300 rupees per share mark. So let's really focus when we talk about this particular stock and the news flow that is really impacting the performance. So Deepinder Goyal has resigned as the MD and CEO. The move is intended to, remember, avoid the potential conflicts as he invests efforts on ventures outside of Eternal. So the big question that we are asking today, who takes over? And that is Albinder Dinsa, and the one who brought in the Blinkit advantage to Zomato and really bolstered Eternal with a propensity of a value-creating proposition. Remember that this particular space is hotly contested and also is delivering for Eternal. So let's also take a look at now how this particular company is viewed with the top brass change at the current moment, and what does this really prove about how it's going to go forward. So we are talking about Eternal's big change. Now remember that this particular space is getting very, very intense with also Zepto, a third player coming in, while at the current moment we have a duopoly between Eternal as well as Swiggy. So brokerages believe that nothing changes in the short term. Let's take a closer look at that. So Jeffrey says on Eternal, they maintain a buy with a target price, remember, of 480 rupees per share. Remember, currently it's trading below 300 rupees per share. Blinkit lifts and also the leadership shift is turning a bit positive for Blinkit is a very good news. And Jeffrey says that this particular leadership change is coming in as a welcome move. Nothing changes in the short term, but remember that the long-term view of this particular company is basing itself to the value-driving proposition of quick commerce versus the food delivery aspect. So UBS on Eternal, they also maintain a buy at 375 rupees per share. Devin Joxi joins in now to talk about the big changes that are really taking place in Eternal. Devin Joxi, who's the managing director of DR Choksi Investment Managers. Devin, always a pleasure to welcome you on NDTV Profit. My first question to you, how do you see this change in the top brass? It looks like a much bigger strategic move by Eternal.
Yeah, good afternoon, Nisha. Well, I believe that I think it was an inevitable change, I think, which was required, frankly, because the CEO's main attention was getting focused onto the new area of business, which he has been incubating for a while now. I think which leads into some of the unexplored space like I think having the aviation aspect of the business, or even healthcare aspect of the business, or even for that matter, I think any kind of wearable devices, I think, which he has been investing money into. So frankly, I think his larger amount of focus has always been going in that direction. And that was posing probably, I think, a good amount of challenge for the company in a way, if you want to call it as. So from a perspective of seeing this change in a positive manner, I think the Blinkit, who has been operated by the management, they are coming and taking the role, because Blinkit is possibly, I think, has taken over the business which Eternal is doing of food aggregation and delivery. I think compared to that, I think the Blinkit is becoming a larger business, though it's not profitable at this point of time. Still, I think it is becoming a larger business. So obvious it is that I think the management who has been responsible for managing Blinkit has been given the charge to run the show. Let's wait and see how the new equations, I think, help in changing the contours as far as I think the profitability is concerned. In my viewpoint, I think it's easier said than done, but I think that's what it is. Currently, I think the vision for the profitability, the way it is required to be seen, is not there. Given the size of the company in the marketplace, the market cap of 3 lakh crore, with a profit base, quarterly profit base of around 100 crores, I think at PAT level, is not suggesting anything at this point of time, frankly speaking. So one will have to wait and see how exactly the new model, revenue model, could come up in the given situation.
That's right. In fact, Devin, you also touched upon a very important point, the market capitalization of this particular company, and also comparing it with the performance, the quarterly performance that it is really showcasing. So, Devin, what do you make of the stock movement as of today? There is a clear resistance for this particular counter at 300 rupees per share. The moment it goes past it, there is profit booking, and it comes back below that 300 level. So according to you, how should the valuation of this particular company be seen?
Yeah, it's an important point, Nisha. I believe that I think on a 3 lakh crore worth of market capitalization, if you have to justify the current growth rate of the company, I think the company will have to basically be producing around 10 to 12,000 crore worth of EBITDA profit. Now, today, I think at the 400 crore level of quarterly profit, which is about 1,200 crore of EBITDA in a year, we are talking about, I think, expanding the size of EBITDA to 10 times from current level onwards to justify the present market value of 3 lakh crores, given around 25 to 30 kind of a ratio on the earnings side. So, in my viewpoint, I think it's a tough call. It's a long call, frankly speaking, if you ask me, because the visibility of, I think, producing 10 to 12,000 crore worth of profit, EBITDA, or even for that matter, if I have to look at, I think, a 7,000 crore worth of EBIT to justify the current valuation of around 3 lakh crore. Probably at least I don't have one. So frankly, I think it should be the question answered by many people who are holding the stock. I think where exactly they see the future as far as the profit is concerned. And if there is no profit coming into the books, I think as much as market capitalization is asking for, then from which area I think we justify the valuation. At least I think that would remain a question for me. I think I don't know about others.
That's right, Devin. Very, very strong views when it comes to the over 3 lakh crore valuation of Eternal, and the profit that is really kicking in for the quarter is about 100 crores. Now, when we look at the competitive intensity, Devin, so far this particular space is a duopoly space in the market, with Swiggy as well as Eternal doing similar things. Started as food delivery, now ventured into quick commerce adding more value and potential for the future. Zepto is another counter company which is going to make it to the IPO, and it will be a much larger space. To your question on whether the profit and profitability can be really increased with intense competition and with the kind of business and margins that they really clock in, how do you see this competitive space going forward, food delivery as well as quick commerce, both segments?
So if you allow me to put across, I think one more name beyond the three that you have put across, I think it is the Quick by JioMart.
Yes.
Now, this is an elephant sitting in the room as I see it. I think the company with the mightiest amount of, I think, the backbone, I think, which they have created in the entire retail business, along with their own FMCG brands. In my viewpoint, I think this company deserves, I think, and they hold rather, and they deserve to be seen, I think, a little bit more seriously, because the kind of SKUs I think that they have built through their retail and FMCG business is actually powering the quick commerce business, I think, which they have entered into. And as I gather, I think in the FMCG business, the Reliance Industries FMCG arm is probably growing at a 60% rate of growth, taking over the market share of so many other companies. And at the same time, I think what we are seeing in the quick commerce business, I think they have actually entered into it, and they are becoming a very formidable number two position player in next few quarters time, as I see it. Given the number of deliveries that they execute about 1.6 million order per day, as against Blinkit's $2.4 million, sold for 2.4 million orders per day. Now, given that kind of a pace at which I think they're executing their quick commerce business, in a matter of time, I think they would be at least number two position, if not number one. And if they have got a backbone of JioMart available to them with the distribution touch points which they have created, whether it is a dark store or whether it is actually, I think, the in-store kind of an environment through which they are catering to the customer, in my viewpoint, I think they could pose a very serious competition. And mind well, I think the JioMart Kirana store format is basically providing the services to nearby customers, I think, on a relatively quicker manner. So the moat, as we want to call it as, I think, in this environment, is possibly required to be found out. And that could be best extended by, in my viewpoint, Eternal's management. But as I see it, competition is becoming intense. and probably the other two players which you mentioned, I think they are required to be, I think, also ask about the question as to how they see this competition coming in and growing with the size of the business.
All right, Devin, you have just extrapolated this conversation to another level. Big boy JioMart also giving stiff competition to this particular space, and that is going to add to the competitive intensity and therefore to justify, to your point on the market capitalization that they are really clocking in at the moment, which is not backed to buy enough profits, is going to be a concern going forward. But at the moment, Eternal's big change has been getting a thumbs up from the market. Thank you so much, Devin Choksi, for getting your perspective and depth on this particular aspect. Thank you so much.